Are you thinking about mining some Bitcoin? I'm Colby, the Bitcoin miner plug. If you're thinking about accumulating some Bitcoin and you're interested in Bitcoin mining, I want to share with you 3 things I wish I had known when I started Bitcoin mining. I've been full-time in the game coming up on 4 years. That may not seem like a lot of time, but I've learned a little bit and I want to share it with you. We're going to talk about mining and how to be successful in the business. Miners get rewarded in the form of Bitcoin for their proof of work compute that they deploy through specialized ASIC chips, which consume a lot of energy. There's a lot of real world costs involved. Bitcoin is an undeniably real thing that's not going anywhere because it is digital value, transferable peer-to-peer anywhere in the world. In my opinion, the best way of transferring value to yourself in the future. It's basically time traveling. So let's jump into it. And the first thing I would like to have known more about is this idea of hash price. And what is hash price? Hash price is the price of mining rewards, and it's a uniform metric for measuring how much Bitcoin you can expect based on how much hash power you have online as a Bitcoin miner. It's determined by 4 factors: network difficulty, the block subsidy, Bitcoin fees that people that are using Bitcoin are paying the miners in order to use the network and get their transactions included in the next block. You take those 3 factors and multiply it by Bitcoin price and you get hash price. So it's basically how much Bitcoin a miner is earning based on hash power, and you multiply that Bitcoin by a fiat price in dollars or pounds or euros or yen or whatever fiat you want to use, and that gives you hash price. I wish that I had known a little better when I got started. I had to learn the hard lesson of effectively paying too much for miners because I didn't really understand hash price and difficulty, and I hadn't gone through a halving like we had in April of last year. So this is a 5-year graph of hash price. Currently it sits at about $50 per petahash, or 5 cents per terahash. A petahash is 1,000 terahash. So you would multiply 5 cents by 1,000. That gives you about $50 per petahash. If you're looking at something like an S21, 200 terahash S21, last time I was in school, it would take about 5 of those to reach 1,000. I wish I had a better grip of where hash price was going, because I was buying machines up here when machines were just producing crazy revenue. And that is a look at the last bull market. I'll be the first to admit, I bought the Euphoria and did my back of the napkin math. I thought I was gonna make a ton of money based on that hash price. And as you can see, hash price has come way down. And there's a number of reasons for that. Again, Bitcoin price, but also the halving and also difficulty has gone parabolic because there's so much more hash power being consistently deployed to the network. Difficulty gets adjusted about every 2 weeks, and the long-term trend is it just gets more and more difficult. This is the most competitive business in the world. Buyer beware. You definitely need to know about hash price. My second item here is I wish I had a better grip on how ASICs themselves are priced. So ASICs are the computer which is the Bitcoin miner, and ASIC stands for application specific integrated circuit. So these chips are designed to do nothing other than the SHA-256 hashes required for mining blocks in Bitcoin. By the way, I just got a notification from Ocean that they mined a freaking block, and I gotta say, like, there's no better notification on your phone than if you are mining with Ocean and you hit a freaking block, because that's when you get paid. I just thought I would share that it's not all doom and gloom. It is nice when you hit blocks and you stack Bitcoin, because if you're efficient, you're stacking at a price advantage. Instead of just buying Bitcoin, you're able to mine it through your own hardware, which is freaking sick in and of itself. But you're also able to achieve a price advantage if you're an efficient Bitcoin miner. The only thing better than stacking Bitcoin is stacking Bitcoin through your own hardware efficiently at a price advantage. And some people, I'm not a tax advisor, but some people can take advantage of tax benefits such as depreciating their hardware in a business or an LLC. So ASICs are priced based on how much revenue they produce, generally. If ASICs are producing a ton of revenue, and let's say a Bitcoin miner is consuming $200 worth of energy and operational expenses. If your rate all in per machine is like $200, but if that machine hypothetically under more bullish conditions is producing $500 worth of Bitcoin, well, that leaves you with a net of about $300 worth of Bitcoin that you are making on a monthly basis. Of course, someone's going to pay more for that machine if it's producing 500 than if it's operating at a loss and it's producing 150 and losing $50 a month. Prices can be extremely volatile, and it comes down to hash price. How much revenue are they producing? Operational expenses should be generally unchanging in a professional environment where those machines are operated and maintained. For example, if you're paying 8 cents per kilowatt hour that your machine produces, that should pretty much stay the same, but the mining revenue can be very volatile to the upside and downside. The machines were trading, I remember, for $119 and more per terahash. The most efficient equipment like the S21 XP is now trading for less than $30. If you want to get online, I can get you online within 24 hours. Those machines are trading at a heavy discount, and they've only come down in price since the last bull run. So if you're bullish Bitcoin and you have a long-term positive outlook on where Bitcoin's going, which frankly, if you look at the macro, I don't know how you can have any other viewpoint, in my opinion, then it makes sense to have some efficient hash power online, because you have that extra exposure to the upside. When Bitcoin runs, Bitcoin miners tend to get paid and earn more Bitcoin in the form of a block subsidy, which is of course reduces every 4 years, but also fees spike because more people are using the network. And as I mentioned in my previous video, the network can get very congested quickly. The Bitcoin network can only handle about 100 million transactions a year. Only about a third of America could send a single transaction, and it would take a whole year to process all those transactions. Imagine the world being interested in Bitcoin all at once, and how few people can actually use Bitcoin based on the network congestion of people actually trying to get their transactions into a block, which miners are mining. Fees spike, and miners earn more Bitcoin, and that Bitcoin can be worth a lot more. And don't sell your Bitcoin. So there's that, and then there's also my third point. You have to manage cash flow. We're talking about operational expenses, top line revenue, and you learn very quickly, if you are a hodler and you're trying to accumulate Bitcoin, you learn very quickly in mining that you have to manage the cash flow. Because a lot of miners want to keep all the Bitcoin. Shocking, I know, but a lot of miners don't want to sell their Bitcoin. Bitcoin mining is highly scalable in that you can have one machine online, or you could have 10,000 machines online. Obviously, there's levels to it, and there's different cash flow constraints, whether you're paying a couple $100s for one machine or a couple $100,000 for 1,000 machines. It's not a one size fits all thing. There's enterprise customers, public miners, hobbyist miners, people doing it for the culture, and then there's people who are doing it for business at scale. So you're gonna have to learn how to manage cash flow, and that could look like you buy a machine and you have the cash already saved up that you will be deploying into Bitcoin through your machine, or you're gonna have tighter cash flow constraints if you're managing it on a shorter term basis. So those are 3 things I wish I had known more about before I got into Bitcoin mining. Now I'm doing it full time. If you're interested, drop me a comment. Let me know if you think Bitcoin mining is the future. I can get you plugged in. Be more than happy to consult with you and help you get set up for success. Stay bullish, my friends. I'll see you on the next one. Peace.